Okay, live here, live there, live here. We're live everywhere. Good afternoon, everyone. This is Roman Shersher, your #1 online resource for buying property with this week's Buy, Invest, Sell Broker's Formula for Real Estate Success. Guys, remember, if you like this video, I'd love for you to share it on social media. It helps so much to get the message out. Just tap the share button, share it with your friends and family. And be sure to head over to YouTube and Facebook after this to check out the links to the actual slides and data and the content that I'm providing you to go over today. All right, I bought and sold hundreds of homes from here to Florida over the last 18 years I've been in this business. And I wrote a book on tips and tricks on how to get $10,000 to $100,000 off your purchases. Even in today's market, today especially, you can squeeze out as much as you can, much more than you were able to in previous years. Demand's high, but there's still great opportunities if you know how to buy right. DM me for your free copy of the ebook, free of charge, no obligation. Just hit me up. All right, current projects. We have a new listing coming to sale, a townhouse in Tarzana, a beautiful 2-bedroom townhouse in the heart of Tarzana. If you guys are looking, it's coming out very affordable, $625,000, excellent shape. Let us know if you're interested. We have 2 new rentals coming to market, one in Woodland Hills, one in Northridge. Definitely touch base with us if you know anyone that's looking for a luxury rental. And we have a new property that just hit the market in Jacksonville. One of our properties, a 4-bedroom, 2-bath. We know how to sell right. Florida is having a tremendous increase in inventory right now. Sales are tough in both markets and both coasts. We just put it on the market on Wednesday. We marketed it right, and we already have 3 offers. Okay, and it's Friday. So definitely know how to sell these things. If you do it right, you get the demand. If you don't do it right, you overprice it, you do not get the buyers walking through your doors, and that's the key. All right, so if you guys know anybody that's looking for a good rental property in Jacksonville, we have another one we're renovating right now, and another one that's going to be a rental coming to market shortly. All right, let's get into our content for the week. A lot of information. There we go. Let's share the screen, and we're going to go here first. Share. All right. Mortgage demand dropped in the last week by 10%. These are due to concerns over the tariffs, inflation, broader economy in whole. Rates also went up a little bit. They were dropping. This last week they went up, and that's dropped the mortgage demand by 10% in the last week. A sharp reversal from the recent weeks reflects a growing caution. People are nervous about what's going to happen right now with inflation. Rates aren't coming down. We're supposed to have a rate drop starting in September. We'll see how that goes. There's a chance that there's not going to be a rate drop in September, in which case we have potential inflation due to these tariffs, the tariff situation, and rates aren't dropping, and that's causing just concerns and pause. Okay, buyers and investors are worried the rates might even rise, and so there's uncertainty in the market. That's caused rates to increase slightly from 6.77 to 6.82 on the average, according to CNBC. Applications for mortgages to purchase a home dropped 12% for the last week because, once again, rates went up slightly. All right. Let's talk about the next new piece of news that came out today. And it's that foreign buyers who were absent from the American market or significantly reduced their purchasing have come back to our market. Foreign investment in U.S. real estate jumped 33% by a third year over year. International buyers are spending $56 billion for nearly 80,000 U.S. homes over the past 12 months. That's up 44% in terms of volume. Now, who's buying these? I once reported that the main foreign buyer of our properties was Canada. And China just recently surpassed us. In the last year, 15% or 11,700 homes were bought by China for $13.7 billion worth of purchasing. Canada came in a close second at 14%. They bought 10,900 units. They're buying much more affordable homes. And so California remains the key destination alongside Florida and Texas. Florida and Texas are much more affordable, obviously. And for overseas buyers, they like our climates, obviously, our strong economy, our cultural appeal. And 47% of these foreign buyers, they bought all cash. Okay. And so China on the West Coast, they're buying a lot more of the California properties. And so that's why you'll notice their purchases are double, more than double in terms of what they spent on buying American real estate. And it's because mostly California, whereas the Canadian buyers, a lot of, what do they call those? Snowbirds. They're buying a lot of Florida property, Texas property to come down during the cold winters out there in Canada. All right. Let's take a look at what else is in the news in terms of the market conditions. Small businesses, California Small Business Optimism Index went down a little bit. Ongoing concerns about taxes, regulation, uncertainty. They're cautious. There's a 3-point drop in expectations from the Better Business Bureau and from real sales volumes compared to May. Taxes, labor costs, labor quality are the main worries for small business optimism. Number 2, insurance. Insurance premiums, I've talked about this a lot over the past couple of months. Insurance premiums are on the rise nationwide. Now, nationwide, they're not going up as much as they are in California. Nationwide, the premiums are up. Let me see here. The premiums are up slightly nationwide, to be exact. 8%. Costs nationwide are rising 8% annually for insurance costs. However, in California, we're significantly higher than that. Because of our fires, because of our climate, our insurance costs are rising on an average of 21% year over year. That's big, and that's a concern, especially for people buying in the hills and the mountains and dealing with brush in their area. All right, third, and I talked about this already for a couple of months as well. Homeowners are just staying put. Okay, Californians are holding on to their homes longer than nearly anywhere else. Median tenure in LA, how long these people have been in their homes, is now 19.4 years. Okay, compared to 11.8 national. Significantly. Obviously, our prices have something to do with it, but also we have Prop 13. Prop 13 tax caps the property taxes. And so a lot of people are staying in their properties longer because their property taxes will jump so significantly if they were to buy additionally. Because the property taxes go from when they bought it 20 years ago or 15 years ago, whenever, at those prices, and they're capped, rise only slightly every single year, to now their current purchase price, and at 1.125 on average percent of that current property price. So if they bought at $300,000, let's say 10 years ago, 15, 20 years ago, their property taxes would be about $3,600, $4,000. If that home was now $1 million, they'd be paying close to $1,000 a month or $12,000 a year. Big hike. I mean, three times as much. And so that's one of the reasons in California, homeowners staying put. The next reason is because of the rates and the prices. Our prices have stayed high. We have not seen a major price decline ever since rates started going up, but rates are high and prices are the monthly payments are extremely high. Everyone's waiting for these rates to come down. I know I am. It's affecting all of our businesses and it's affecting the cost of everything we own. So despite more market churn in more reasons, in more areas, regions, and despite more inventory in the market, despite a lot of sellers actually giving a lot more concessions, I'm getting such great deals for my buyers right now. Still, a lot of people are just staying on the sidelines waiting for these rates to come down, which I don't think is a good idea, because by then everyone's going to jump in and you're going to have a lot more competition. It's going to be like a couple of years ago when properties were selling for $100,000, $200,000 above list. I genuinely believe that. Let's take a look at where our mortgage rates are today. Okay. So last week, when we did our update, the 30-year fix was at 6.75%. It's now at 6.81%. As I mentioned, it went up. This actually came down a little bit. It went up to as high as 6.85, I believe, which was 10 basis points. The 15-year fix was 6.05. It's now 6.04. Came down a little bit. 30-year jumbo went from 6.85 to 6.92, so it went up 7 basis points. The 30-year FHA went from 6.2 to 6.39, almost 20 basis points. And the VA went from 6.22 to 6.4, 18 basis points. So as you can see, rates have gone up slightly. Let's see what they do next week and in the weeks to come. So the market implications, number one, affordability. Rising rates, insurance costs, combined with owners' reluctance to sell, they're keeping a lid on transactional volume. Transactional volume is still very low, and it has been for 2 years. And it's driving a lot of buyers into the rental market. They're waiting. We had a buyer for one of our houses. He made us a lowball offer on one of our houses. It's what a lot of buyers are doing. And when he couldn't get his lowball offer accepted, he went and decided to rent for the next year and then come back a year later. I think that's a mistake. I think next year with lower interest rates, he's going to pay more, but that's what a lot of people are doing. And secondly, foreign demand. It's increased. It could fuel local tension. You're seeing a lot of international buyers come into our space, and so there was that competition. And I could say that is one of the reasons especially in California, which still is one of the preferred destinations in the world, it's keeping our prices very steady. Our values are very steady, even though rates are high, even though those costs are high. It's keeping it, especially the luxury market, it's keeping it steady, whereas other markets are falling tremendously, like Austin, San Antonio, Boise, Idaho has seen tremendous price drops all over Texas. And Florida, in certain parts of Florida, not Jacksonville where I'm at, but places like southwest Florida, excuse me, you're seeing price declines, significant price declines. The name of the city escapes me, but it saw a price decline last year of 9%. That's significant for 1 year. Okay, and lastly, business sentiment. Businesses are cautious. The higher insurance premiums, higher rates, slow home sales, small business, slow small business growth across California is making people very cautious, and it's having a lot of people sit on the sidelines. So what advice would I have? Let's go back to our main screen. Here we go. Advice for buyers: number one, stay patient. Number two, shop around. Right now, competition has eased. Like I said, I'm getting tremendous deals for my buyers. Talk to me. I'll tell you about some of the most recent purchases we made for our buyers. Really out of this world. I wouldn't have been able to do this a year or two ago, just because we would have had too much more competition. Now I'm not only getting our offers accepted above the 3 to 4 other offers or interested parties involved in every transaction, I'm getting a ton of credits and I'm getting great prices. And you have to know how to negotiate, how to properly position your offer in order to get those crazy deals. and as a result, we're seeing that sellers are more willing to negotiate. They're being more realistic. Their agents are properly preparing them, and then we come in and we work with the agent to get our offer accepted at the right price. Okay. Watch for further rate changes. Keep an eye on local insurance requirements. Okay. Rates are are moving. Okay, they're moving down. They're moving up. Keep your eye on where they're at. Talk to your local mortgage professional. Talk to us, and we'll keep you apprised of what's going on in terms of the insurance rates, and especially the mortgage rates. And lastly, for sellers, be realistic on pricing. Be realistic on timing. Okay, you're not going to sell in the first week to 15 offers. It's just not the way the market is working right now. If you're not in a rush, perhaps you could wait. I don't think so. I think right now we're in peak summer months, so I think that the demand, if these rates don't drop, is going to even taper off a little bit more. October, November, the slowest month always being December and January, and so I don't think you wait. In high demand foreign buyer neighborhoods, competition could be heating up. Okay, we're seeing a lot of people. A lot of foreign investment, as I mentioned. Take a look at the link to the article that I put in here. We'll post that on Facebook and on YouTube, so you can take a look. All right, our quote of the day: John D. Rockefeller, iconic American business magnate, philanthropist, one of the history's wealthiest Americans, said the major fortunes in America have been made in land. Buy land, they're not building any more of it. People think that crypto today is like yesterday's land. Yes, it will. Eventually, the mining will stop for certain types of cryptos, in which case it's kind of like land. They're not building any more of it. That's why we've seen a lot of crypto increase in prices recently. As well as its acceptance in the banking industry more and more. You're seeing the prices on those go up. But this quote is a reminder that despite economic downturns, despite cycles, long-term strategic approach to real estate continues to be one of the best and most proven ways to build and preserve generational wealth. I know I have significant investments in real estate. I continue to build my portfolio on a monthly basis. I try to. I suggest that you do the same. All right. Thank you for joining us. Remember, if you like this video, help spread the word on social media. Helps us so much. Just tap the share button and share it with your friends and family. This is Roman Shersher, your #1 online resource for buying property, saying thank you and have a great weekend.